So, hello, Merch Madrid. It's a pleasure to be here. It's such a well-organized event, and we're going to talk about the future of asset management with these three guys on the right of me. I'll let you guys introduce you, but I doubt we've had a better timing for this event since, well, all the assets are doing all-time highs. Maybe we're witnessing a change of regime, and yeah, it's excited to talk about the future of asset management, digital assets, etc. So we can start by you, Bruno.
Yeah, thanks. So I'm Bruno Sousa. I'm one of the founders at Hashtags. Hashtags is one of the first crypto fund ETF managers globally. We started off in Brazil 2017, 2018. We have ETFs, ETPs in Brazil, here in Europe, in the US, close to 2 billion AUM today. And we're the largest crypto index manager globally. Our focus is on index ETFs mostly.
Next, we've got Max here.
Hi guys, yeah, Max, founder, CEO of CoinChange. We're actively managed asset management fund and a platform out of Canada. We have a presence in the US, Gibraltar, Europe, manage around $200 million, actively managed across DeFi and CeFi, mostly trading strategies. So I'm going to be talking about active management.
And we've got Karim here.
Hi everyone. I come from 21 Shares. We are one of the largest crypto ETF issuers in Europe. We have around $14 billion in AUM. We've just launched our 50th product. So we span all across the crypto ecosystem. And yeah, it's a great opportunity considering where the market is at right now to be getting into some of the weeds about this.
So, Bruno, you're based in New York, and from your vantage point, how is demand for digital assets evolving among institutional clients, and what barriers remain for bigger adoption?
Yeah, I mean, we've seen the story of institutionals are coming for years. This doesn't mean much when you read it on Twitter. You know, people mean different things by institutional, right?
Yeah.
The fact of the matter is that globally, AUM in crypto products has been mostly retail. That started to change after the US ETFs came out early last year, right? So you can start, if you look at the tape, you can see some large sovereigns, Mubadala, some corporate investors too into the US ETFs mostly. So that's a big trend. If you look at Europe, most of the institutionals, they would be, we would call, let's say, professional investors is probably a better term. Family offices, private banks, Switzerland mostly. Few, let's say, investment advisors in some other countries, but still early. So that means that I'd say probably the exception there is Brazil. When you talk about institutional adoption, Brazil, I think, is by far the most advanced country in the world. If you look at the large banks, most of them have active crypto offerings. You can buy, the tokens in your Itaú app, in your BTG app. Very traditional banks like Bradesco, Banco do Brasil, so on. If you look at the US, this is still starting. The gates being open from the different gatekeepers. But yeah, the hardest part is behind us, I think, which is bringing legitimacy to the asset class. It's there already. So now we're going to start seeing bigger and bigger inflows into the products.
Even Citadel, Ken Griffin, yesterday, he said that the Bitcoin is a debasement trade. So people don't trust fiat no more, right? Not euro, not a dollar. So they're starting to buy gold,
Yeah.
all-time high, Bitcoin, all-time high. So it's part of the debasement, not only the institutional adoption, but also debasement, because people don't trust the currency as much.
Yeah, well, I'll take this comment. Do you think we're witnessing a change of regime, Max, in terms of monetary regime, or is it we're at a crossroads right now? You'd say?
Listen, it's impossible to predict anything with Trump, right?
Yeah.
And he farts here, says something there. The markets are all over the place, right? I mean, it looks really nice on surface, but under the surface, not a lot of people are making money either.
Yeah.
A lot of funds are losing money that are actively managing because it's very unpredictable. There's a lot of manipulation to the market as well. I mean, it's a pretty thin market, crypto, compared to stocks or currency markets. So it's still kind of nice. Bitcoin is growing, but I'm not sure that a lot of people are making money.
So
Maybe the OGs that bought it like for $2,000, $27, but under the surface, I mean, the adoption is there. Obviously, it's nice. Everybody loves Bitcoin. It's here to stay, and the debasement thing helps. But overall, in terms of the like retail, I think retail is also pretty dead. I mean, right now with BNB meme coins, like if you guys I don't know heard of it, BNB is at all-time high as well.
yeah,
Right? Why? Because meme coins, right? And meme coins that Solana. Solana became a people's chain just because of meme coins. So BNB is doing the same right now. And by the way, there it kind of looked nice. I looked at the stats yesterday. Out of 100,000 traders on meme coins BNB chain, 70% made money. I mean, for now, right? They did a report yesterday. But I think the retail is still coming right now. So meme coins is usually the indication of liquidity. Where is the liquidity coming and where is it sitting? So I think the retail is going to start coming in right now, as always, like exit liquidity. So retail comes often quite late, right? I mean, we're not retail. People who are here, they're far from retail because you guys are in the know. You're in the market, you're following. But people that don't follow daily, they come quite late. So try to time the market.
I gotta say, I wasn't expecting talk about meme coins in such an institutional event in the second question, but that's fun. So what would you say institutional investors can do to manage risk with this volatility, intrinsic volatility that crypto brings?
Who are you asking?
Max,
Me?
yeah.
So how to manage volatility in the crypto markets?
Yeah. Risk.
I mean, depending on what you're trading, crypto markets are so big. I mean, you can look at DeFi markets, right? And you can look at meme coins. You can look at market making. You can look at ETFs. They're pretty low risk. I mean, still a wrapper, but pretty low risk. You can look at DATs, digital asset treasury businesses that people buy to get exposure, right? I think volatility, I mean, in crypto is everywhere. Just which volatility are you willing to take? And if you're not a professional investor, you're going to get screwed sooner or later anyways. So, I mean, volatility is really hard to manage. You have to be a professional asset manager to do that, as well as regulatory risk, legal risk. Volatility is just one of the little pockets of that risk. But people trade volatility professionally and extract gamma or whatever profit they feel possible that market. So it's hard to manage volatility pretty much.
Okay. So Karim, you come from the ETF ETP side. Institutions have been adopting in the past year and a half. Buying these ETFs at a big rate. Would you say that with all these assets making all-time highs, Bitcoin, Ethereum very close, meme coins, etc., that the retail opportunity to be ahead of the big money is already gone, or you say that there's still opportunity out there because the market has still ways to go?
I think there 100% still is an opportunity because it's not an information edge anymore because everyone has access to the same information and institutions are aware of Bitcoin and Ethereum and all the large caps. But if you look down the longer tail of risk assets, you have things like Legion and Echo. These are ICO launchpad platforms that democratize access to private opportunities that only institutions gained access to before. Some of the most successful launches recently were things like Plasma, the stablecoin chain. People did 300x on initial investment, and people were allowed to invest up to $100. So they democratized access, but they also made it very much accessible to the small retail. You have things in DeFi. In DeFi, even though it seems like we've gone through a lot of it, there is still a lot of really cool new innovative products that are coming out, whether it's innovations around stablecoins. In AI, we have the same thing. You have things like AI agents, decentralized AI inference and learning. So yeah, there 100% is still a lot of opportunity. It's just about understanding where the innovation comes from, and not just about how in the past 2 cycles it was more of a pinball, like you just throw some darts and hope for the best. It is not like that anymore, but there is still an opportunity if you know where to look at. That's for sure. And Hyperliquid, even if you look at Hyperliquid, this was one of the most successful retail-driven, community-funded launches. It did 60x, 70x, and there were no VCs in it.
Yeah, you have Aster right now, right, by CZ as well.
It's debatable how it got so much traction, but that's a topic for a different time.
Yeah.
Listen, in terms of volatility, I was thinking, I read also something yesterday. S&P for the last 5 years is 106% up in 5 years, right? But in Bitcoin terms, it's 88% down, right? So I mean, the debasement of the currency make all the investments look good on paper when you really earning something in dollars, but if you benchmark it against another asset, it might be losing, or gold or Bitcoin, right? So.
Yeah. Open question for the panel. Like, it's been a common perception for many years that there was some career risk for asset managers to hold crypto or Bitcoin on their portfolios. The tide seems to be changing, particularly in the US. But would you say that is it something now that it's reversed? Like, is there career risk maybe for some of these guys to not hold crypto or refuse to hold crypto?
It started to change. It's not completed yet, right? And it's directly proportional to the size of the institution, right? So the larger the bank or platform or gatekeeper, the slower the movement. That's expected. If you take, Swiss banks, which are an interesting example, given the breadth of clients and services that they have, you have private banks that have been dabbling in crypto for their clients for a long time. But if you go to UBS or Pictet, the larger banks, they're still not there. So it's still a factor, and very much concentrated at the top. So you depend on approval from CEO level, CIO level, for the bank to open up the gates down. That's where I think the US can leapfrog some of the European banks. We're seeing accelerated movement in the US in that direction. But make no mistake, this is still very much concentrated on Bitcoin. Bitcoin, maybe ETH. You talk to most of these guys, they've never heard of Solana. You think Solana? No. So anything beyond ETH is already very, very out. Okay, so then of course we come with the index narrative, which is different. Index investing is something that an advisor or bank can get behind. So I don't understand the market, I'll just buy the market. But it's always tricky when we talk about institutional adoption, because you see people talking about all the assets and there's there's no professional money in anything beyond Solana. Maybe not, and if there is, it's irrelevant. It's a few $1 million.
Yeah.
If you're looking at the top, yes, then you're going to have Millennium. You're going to have some big hedge funds, some big sovereigns, some corporates in Bitcoin, and some in ETH. But that's it, right? So.
I would add also, I mean, I very much agree with this sentiment, but I would add that specifically for Bitcoin and Ethereum, like risking being behind the curve is much more worse now than having measured exposure. Like, even if you don't want to have any exposure to any of these three assets, your policy needs to be clear and to be rational enough to say that, yeah, we're not touching this for now, but we have to explain why. And I think that's a severe difference from 4 years ago.
Yeah. Stable coins. So Max, they are becoming the backbone of the on-chain activity. You say stable coins would you say that they are the killer product? Will CBDCs coexist with them? It's a big topic. I've heard a lot of panels talking about it.
Yeah. Stable coins, I think there's a little misconception as well. I think a lot of volume comes from trading still. And when you see those billions of dollars, I think a lot of that is market makers, a lot of that is in and out liquidity between exchanges, so arbitrage. There's still a lot of volume, way more volume in trading, professional trading, asset management on stablecoins than retail payments, right? And those retail payments, I mean, there's a lot of ways to do payments otherwise, like Wise.com, Revolut, right? All good apps, all fast and cheap as well. So I think stablecoins, I mean, in the US right now, a big debate in the US at least is, should we pay yield back to the customer or no? Right? Banks don't like that. They like to pay 25 bips on your account, right? And then guys like Circle are trying to advocate to pay some of the treasury yield back to the customer who holds the stablecoin. So I don't think they're going to make it. I think in Congress they're going to kill it, and the banking committee and the lobby is really strong. Not as strong as in Europe. Europe tries to kill a lot of innovation. Right now, at least the US, they're trying to leapfrog a lot of that, but there's still a lot of pressure from legacy businesses, right? Not to lose retail or the banking deposits that they repoffecate otherwise. So stablecoins is great. Listen, it's always been the only use case in crypto that's been real. I mean, it's the first tokenized asset. We're talking about tokenizing real estate, tokenizing headphones, but really, stablecoin was tokenized like 12 years ago, right, by Tether. I mean, we can talk about Tether. I mean, how reserves are backed, or how business is operated. But I mean, they are the trailblazers of the tokenization of the first real world asset is the dollar. So yeah, I mean, I think it's definitely huge kind of use case, but for me, it's also still more trading and more liquidity across the exchanges rather than paying for a Coca-Cola, in the bar.
We're seeing, we are seeing some interesting stuff, especially in Brazil for those who are Brazilian. On the FX side, if you look at, BTG Pactual has their own stablecoin, so that has a dual function. One is just exposure of, your portfolio to USD, which is hard in Brazil. There's no easy way to buy it digitally. Let's say, physically you can buy it, but an account with USD is something hard. So you can just in their app convert to their USD token, and they're using it for their internal settlements of all of their FX. So that's massive. It's massive volume. I think Portillo's here speaking about it. I don't know if you spoke about it yesterday. So we are seeing the Brazilian banks, for instance, going that direction, and I think it's always interesting, especially this being a LATAM event, because people tend to speak about regions and say, oh, LATAM. LATAM is, Argentina's, you're trying to get away from the currency. That's not the case in Brazil.
Yeah.
Like you use it for, it's like saying Asia and you're conflating South Korea, Japan, and Laos.
Yeah.
Right? So it's a pet peeve I have, and it comes a lot from the American and European way of speaking about crypto globally. The use cases of stable coins in Argentina, Mexico, and Brazil, they'll be very different. But we are, I think, one interesting sign is that the thing I most hear about on the street in the US, here in Europe, when you go to a bank, is stable coins. People want to talk about stable. So we really hit, I'd say, first use case in crypto is Bitcoin. So Bitcoin is there, it's done its thing. But the second is stable coins, they can touch it, they understand what it does. So it's a lot easier for them to grasp its potential rather than NFTs or even tokenization. Like stablecoins, they can see it, right?
Yeah.
And then, like in countries also in the Middle East, like in Lebanon, there are because I have a lot of friends from there. There are certain shops that only accept Tether. They don't even accept the US dollar. They literally have the sign of Tether like above products. So it very much again depends on the region and on the country. I don't think as Bruno has very much clarified, like it differs from one context to the other, but it's very much gaining real world usage. And even yesterday, Allium, like one of the dashboards that Visa uses, we just reached 1 trillion in September in organic settlement volume. This is the first time that we've ever reached that threshold. So
yeah, that's big. We're in Europe, and here things normally are slower. If we talk about stable coins, the volume it's way down compared to the US, for example. What do we need here in Europe for faster adoption in stable coins and in general in crypto? Have we lost an opportunity with MiCA being approved ahead of the Genius Act, for example? Is it, a train that's gone? I don't know.
I used to be a lawyer, okay? So I'll talk as a lawyer. I think there's a very wrong concept in Brussels, in Europe as a whole, but Brussels mostly, of innovating through regulation. That's not how things work. That's not, and if you look at the contribution of Europe's, GDP to the world from 2008 to 9 to today, split in half. So it used to be the size of the US, now it's half of the US.
Yeah.
And it comes down to tech. Like if you look at, the Mag 7, the big tech companies, in Europe, apart from Spotify, SAP, and now Revolut, if you want to call it, but still private, there's no relevant big tech company, right? So tech is seen as a negative thing, and that affects directly crypto, that affects stable coins, that affects the whole thing. I think, we had a leg up on the ETF, the ATP space, especially here. But now we're seeing the volumes, the US are going to take over. That happened with ATPs. You'll probably see that in other segments of crypto too. So it's, it's Europe's big dilemma, right? And it's a cultural thing, and I think we're kind of stuck. So
yeah, I completely agree. Political, I think, and regulatory and culturally, kind of last maybe. What you said, 2008, 9, last 15 years probably.
And it's a crazy thing. I think it comes from the association of tech with social media.
Yeah.
And the thing that tech is bad.
Yeah.
There's a very big stigma around tech. and it wasn't like that in 2000, right? It's
Yeah.
so I think the relevance of the contribution of Europe into world technology is diminishing, and that's a shame. And the same happens in AI. Same thing.
Yeah.
Regulate AI before it even exists. So there's things like that.
Yeah, I think Canada. I'm from Canada originally. Right now, live in the U.S. But Canada is the same thing. I mean, a little earlier when Nortel, BlackBerry still was like a household name, there was a lot of startups, a lot of culture of innovation, a lot of risk. But right now it's like Norway.
Yeah.
Norway is a good example, by the way, from Europe, right? But no risk, very little capital, no startups. Crypto is bad. Oh, you're in crypto. Oh my God, I thought you were in the bank. Okay, stay away. And this kind of approach, right, to people, perception, right, capital, slowly just kind of kills the innovation. I agree.
Okay, well, we still have 5 minutes to go, well, a little bit less than that. So I want to shoot a rapid fire closing round of questions, if you don't mind. In 5 years, okay, all of these questions. So if we look ahead, 5 years ahead, where will the capital of crypto world be, would you say?
I would argue that it will be in New York. I think we're going to see multiple capitals of crypto, but New York by far.
Not in Asia?
I don't think so.
Okay.
I think there's a lot of activity. Like there's just so much happening in New York. I know that also we don't give enough coverage and we don't have enough visibility into Asia as much as we've seen with Token 2049, like in Singapore. But I do very much think that New York is going to be playing a key role here. But
Guys,
we have
you're
Listen,
there?
I live in Miami now, so I wish it was Miami, right? And it's kind of a hotspot for crypto right now. New York with the new mayor, I doubt it. Even Ken Griffin yesterday was talking about Chicago. They used to own the full building in Chicago was Citadel, right? Right now he said we rent 2 floors. From 1,300 people working in Chicago, 200 is working in Chicago now. 1,200 went to Miami. But I think it's going to be Dubai. So, I mean, I wish it would be Miami. I think it's Dubai, the positioning, the political. I think it's either Dubai or Miami.
Like regulation is very easy there, right?
Regulation is easy. I mean, a lot of expats, a lot of money, a lot of risky investment into the new frontiers of AI, data centers. I think it's either Dubai or Miami.
New York. I think it's New York just because the size of the U.S. capital markets is something that's hard to grasp unless you start going deep into the numbers. So what we're seeing is like, let's say, a hyper financialization of crypto. So we're talking about the use cases. We're talking about stable coins, tokenization, stuff. That's all connecting to capital and financial markets, and it's actually a shame that we're not seeing more developments on deep in some other stuff. The other stuff in crypto that's not financial. But while the main use cases continue being financial, capital markets, developments, integrations, and just sort of the merge of the stack of the old tech stack in finance becoming, a blockchain-based stack, then it tends to concentrate in the capital. I think maybe the interesting question is like, who's the biggest losers in that? Biggest losers for me is London. London's being left behind.
Yeah.
So the UK is beating Brussels in being bad at policy. So that's one thing, and I think Europe as a whole is a loser in that. And if I'd say it's like New York, Singapore, Dubai, it's I think it's obvious hubs. Miami too, but Miami, I'd see it as a subset of the U.S. for tax purposes mostly, because the ecosystem is more in New York.
That I think about New York as well. Yesterday, Polymarket raised $2 billion on 7 billion valuation, so 9 billion post from ICE.
Yeah.
Right? So it's like, obviously, there's so much money in New York, it's hard to compete. And financialization of everything right now that happens, I agree. Yeah, it's
One more
possible.
before we wrap up, as we're running out of time. What will the Bitcoin price be in 5 years?
5 years.
depends on so many things.
There's lots of outrageous numbers being thrown out there, so I mean, don't be afraid of hitting your shot.
$20?
750. I call 750.
Okay.
300 to 600. It's really hard because again it depends on so many different moving parts. Depends on how this global debt issue is being handled. Depends on if a global war breaks
We
out.
don't know anything. This is
Yeah.
it's serious.
Yeah.
If you ask 1
Yeah.
year, if you ask end of the year, it's hard. We're gonna guess. We're gonna say.
Yeah, by the way, what's
someone's gonna say
what's
100,
what's the
you're
end
gonna
of
say
the year?
180.
Would pull up a
Yeah,
projection with some chart.
5 years, I mean, it's really far, yeah. I mean, $1 million.
Yeah.
What about end of the year? What do you think?
Yeah, end of the year. That's more.
150.
150?
Okay.
What do you think?
Same.
Same?
Non-investment advice.
blah,
Disclaimer.
blah,
blah,
blah.
blah,
Yeah.
blah, blah.
Okay. Well, thank you guys. It's been a pleasure having you here. You did great. It was very interesting. And yeah, give it up for our panelists.
Thank you, guys.
Thanks.